Well, Tesla is getting into the Bitcoin business. Does this mean that you now are in the Bitcoin business too? Maybe you are and you didn't even know it. And bureaucrats thought they could turn the economy back on like a light switch, but apparently they don't understand how supply chain works. And will the latest round of impeachments have any impact to the economy? These topics plus our one-on-one with business expert, author, and YouTube sensation, JJ the CPA, today on the BizPo Show. Welcome to the BizPo Show, a place where politics and business collide in a way that we hope is both enlightening and entertaining. Coming to you from Dallas, Texas, I'm Seth Denson, joined as always by my good buddy in New York City, Dan Geltrude. Dan, how are you, my friend?
Great, Seth. I have to tell you that so much going on in the news, it's literally hard to keep up. For you and I, we have to balance our lives between our real jobs, I dare say, and everything that we do around the media. And I have to say, this media thing is becoming full-time at this point.
It is. It's a lot of fun, though, right? I mean, getting to share our opinions and thoughts, not just here on the BizPo Show, but around networks across America and even internationally. I saw that you're becoming quite the regular with our friend Neil Cavuto on Fox these days.
Yeah, I am, and it's been really exciting. Neil's a great guy, and the one thing about Neil, no matter what you think the topic is going to be, he pivots, so you really got to be on your toes at all times.
I've been in some of those interviews myself, man. I get it. Yeah, you always got to be moving. Well, listen, you teased it at the front a little bit, as the song says. We had a long way to go and a short time to get there, so let's dive right in. Last week, I think this was at the forefront of my mind, at least, was that Tesla is getting into the Bitcoin business. What say you on that move, my friend? Are you a big Bitcoiner?
Well, I wouldn't say that I am personally a big Bitcoin investor, but I would say this, Seth, that is certainly a part of our future. I think Bitcoin is here to stay in terms of digital currency. I've said that for a while. Now, what's interesting about what Elon Musk has done, because you have corporations all the time that have investments, whatever that may be, and he's made a strategic decision to go into the Bitcoin investment arena. Now, look, a lot of experts are saying, Seth, that there's a lot of runway in the value of that investment. So, I think it's $1.5 billion he's put in. So think about what the upside of that could be based upon how Bitcoin has been running and what it's projected to run. But I think, if nothing else, Elon Musk, richest man in the world currently, has given a lot of legitimacy to cryptocurrency.
Well, there's no question about that, my friend, but I think you bring up a couple of key points that need to be kind of dove into a little bit. The first one is Elon Musk, and you said his name about 3 or 4 times. And yes, I said from the beginning that we need more legitimacy around this before I become more bullish on Bitcoin. I'm really not. And that's in large part because of probably a lack of understanding. I'll admit it. I mean, this is a unique aspect. It's not a currency. It's not a commodity. It's kind of a currency and a commodity. I mean, I'm trying to figure those things out. But here's the thing that I think is really important about what Tesla did. Tesla did it. Elon Musk didn't do it. It wasn't his money, although we could argue, yes, a lot of his money is in Tesla. It was Tesla. Tesla's now part of the S&P 500. Bitcoin, by and large, unregulated. And so as you start to think about this, S&P or Tesla being part of the S&P means that anybody holding that index fund, and many people do in their 401ks, they now own Tesla. And Tesla now owns Bitcoin. So whether you like it or not, you very well may be investing in Bitcoin. And so this is one of those things where, again, with a lack of regulation, a lack of full understanding, I think that what Elon Musk did and Tesla did in this move is that they are going to force the hand of the SEC to really start looking into Bitcoin to make sure that it's properly regulated and managed.
That's going to be tough, Seth, because the nature of cryptocurrency is to kind of be a little bit mysterious, right? We still don't even know for sure who started this whole thing. And the mining concept, there's so much to it. And I think a lot of people backed off, to your point, because they didn't quite understand the concept of it. And many still don't. So it's hard to invest in it. However, from what we've seen over the last couple weeks, emotion drives a lot of investment. That's a bad strategy, but that's the truth. So now when you see Bitcoin starting to get headlines through someone like Elon Musk and Tesla, now you are going to have people moving in that direction. And then what's going to happen? You're going to have the value of Bitcoin going up. So Elon Musk, who, he's not a regular guy, and many times geniuses aren't, and I think he is a genius. Is he really having a big play in pushing up the value of Bitcoin for the benefit of Tesla? And I think, by the way, you can buy a Tesla now with Bitcoin.
Yeah, you can, and you bring up a great point there, because I think as we start to really dive into this, we have to understand the roller coaster ride that is Bitcoin. I mean, by the end of last week, Elon Musk had, in effect, based on the pricing increase, made his company somewhere probably between 150 and $200 million because of his $1.5 billion investment. That's a pretty decent return in, what, a week? But here's the other challenge to that. Bitcoin's fluctuated about 40% in price over the last 30 days. And so, again, because he did this with Tesla, right, we have to start to now wonder about fiduciary responsibility of an organization to their shareholders. And regardless, this isn't going away. I agree with something you said at the very beginning, which is Bitcoin is here. And so we have to start to understand it more, and we likely will have to start to see the government's involvement in regulating it at some level. I know that makes it less attractive, but maybe, just maybe, it'll make it more stable. So hey, I got another question for you. Other headlines hitting the news this week, because like I said, we got a lot to cover. It was recently announced that auto manufacturers are going to have a challenge getting a lot of these cars off the assembly line as we reopen the economy, because, surprise, surprise, supply chain matters. And what they're finding out is that they can't get the chips, the semiconductors, those things that they need to put in the computers of vehicles, so they can't get these vehicles off the assembly line. And so it left me wondering, and I'd love to get your thoughts on this, what did the government think was going to happen when they just shut it down? There really is supply chain in the economic system.
So many unintended consequences related to the pandemic and the cause and effect thereafter, Seth. So now you have this pandemic which lands in our country from China. Let's call it for what it is. So now we have to deal with that. And politicians, of course, particularly in the States, are going to want a quick fix, right? Because they're headline driven, they're poll driven. So you have these numbers of COVID cases and COVID deaths occurring. So the politicians immediately say, we got to stop this. So instead of really thinking through what the best thing to do in the big picture, shut everything down, keep everybody locked up, and thereby we can get the number of cases and the number of deaths down. Now, I don't know, and I don't know if we'll ever know if that really worked. But what we do know, Seth, is the impact on the economy, and some of that is going to be forever. You cannot basically turn the United States of America off from an economic standpoint and think you can restart the engine and drive away. Not going to happen.
Well, it's not going to happen, but it's not just America, right? It's the world. And when we think about these chips and the challenges thereafter, I mean, you have a lot of steps in the process. You have to mine the goods, then you have to smelt them, then you have to manufacture them, then you have to package them, then you have to ship them, and then you have to deliver them. There are literally steps after steps after steps, and that's just for a chip that isn't the entirety of the car, right? So this is the challenge that we will see going forward, and I'll tell you, my friend, this is going to have a ripple effect across the economy, because not only does it mean that the fewer cars are going to go out, but what does that mean from a cost and supply and demand factor? And this is just one aspect. We can expect this to go across many sectors of our economy. But I'll tell you one other thing that's impacting this that I don't think the bureaucrats and the politicians plan for, the thing we just talked about, Bitcoin. Everybody's buying up computer parts to mine for Bitcoin. And as a result of that, there's a shortage of these parts. And one last thing I'll say about that before I get your final thought on it. But one thing that I think we need to be careful of as we start to think about the future of Bitcoin and its engagement in our economic system. Two things really. One is, with more businesses getting involved in this, while it is a decentralized currency, if businesses can start to influence it, are we now creating kind of a somewhat business-related oligarchy on global currency? And then the second component is, right now, the vast majority of new mining of Bitcoin is coming out of one key economic nation, China. There's some food for thought for you.
Yeah, what a surprise that is. If we didn't think that China was going to be the greatest challenge in the history of this country, we were really asleep at the wheel, and maybe we were. But it's time for us to wake up and realize that China is really a threat to us, not just militarily, because I could be wrong, but I don't anticipate us going to war or having a nuclear war with China. It will all be economic. And when we see things like Bitcoin and how business is evolving, Seth, it is so interconnected. It's almost hard to wrap your mind around it. But I will just say this related to the microchips and where we are with that. This goes back to one thing, that the politicians and state governments played this all wrong. They waited too long to take action other than shutting everything down. So now we're in the situation we're in, and we're going to have to work our way through it.
Speaking of economic impact, and real quick, I don't know about you, but all last week and even over the weekend, every time I turned on the television, what was the headline? Impeachment. Yeah, we're impeaching a guy that's actually no longer in office. While we got all these other things going on. There were a lot of stories last week, but that seemed to be the main one. Do you think that this impeachment hearing is going to have any impact on the economy?
In the end, Seth, I really don't. Now, look, I'm not a constitutional expert related to can you actually impeach a former president? So I'll let the experts, work through that. What we do here on the BizPo Show is we try to figure out what's happening politically, and this is as political as it gets, Seth, right? This impeachment, and how that is going to trickle over and across and into business. In the end, I don't think it's going to have positive or negative effect. I think it's a lot of political noise without a lot of substance, and I don't think much is going to change. But to me, it shows that at least there's some politicians, and on both sides, who are completely reckless and aren't even thinking about what the impact of these proceedings can be on the U.S. economy, which is where we're focused.
Yeah, I tend to agree with you, my friend, although I will say this. I think that if there is any economic impact as a result of this, it's the economic impact of inaction, that our Congress and U.S. Senate, quite frankly, are not acting on behalf of the best interest of our country because they're spending their time with this as opposed to spending their time focusing on fighting the coronavirus crisis, reopening the economy, and helping out those that we've quite literally shut down over the past year. Speaking of, though, what you said we try to do here on the BizPo Show, which is bring information that's impactful. I'm excited about our guest this week. JJ the CPA, also known as Joshua Jensen, that's how I know him, has been a friend of mine for a number of years. I came across JJ years ago, and it's been amazing to watch his ride to fame as he kind of, during the PPP crisis, became really a YouTube sensation because he started putting out information, much like we're doing here at the BizPo Show. He wanted to help people out and inform people and say, hey, here's what's going on. So if you're a business owner, okay, you're going to want to tune into this next segment. If you are an employee of someone, you're going to want to tune into this next segment. And if you ever file your taxes, you're going to want to tune into this next segment. Everybody else, you can tune out. But nonetheless, JJ the CPA will join us when we come back. Welcome back to the BizPo Show. Well, if you've been on YouTube lately, you've likely seen our next guest. I met JJ the CPA years ago, was quickly impressed with not only his business knowledge, but really even more so, his personality. He's larger than life, but smarter than most. And if you engage in our economic system, which is pretty much everyone, you'll want to hear what he has to say. JJ the CPA, welcome to the BizPo Show.
Oh my gosh, I'm honored. Thank you, Seth. This is a wonderful opportunity. Thank you for the great introduction.
Hey man, I got to tell you, I may be the most fortunate guy in the world. I literally have JJ the CPA and America's accountant, Dan Geltrude, with me right now on screen. And quite frankly, I'm not spending the hundreds of dollars an hour that it would take to get the two most premier accountants in the United States on the phone with me. This is impressive. It's a big day. Well, I don't know that I want to ask you questions. I may need to actually start talking about my tax strategy.
Love it. I'm ready.
Hey, JJ, I got to tell you. So when Seth gave me a call when we were talking about guests for the show, and he said, hey, how would you feel about us having a CPA on the show? I said, all right, well, who is it? And he said, well, I think we can get JJ the CPA. I said, are you kidding me? You don't even have to ask. Bring him on.
Goodness.
So we're happy to have you.
That. Well, I'm honored, truly, and I appreciate that so much. And I'm ready to discuss what we're talking about today because I think we've got some important things you guys have asked me to come and talk about.
We certainly do, and our listeners and viewers are going to be pleased, I think, with the outcome of this because there's so much information out there. And so maybe I'll just kick it off and ask, JJ, give me your thoughts on kind of this new PPP program. I think that's on the forefront of a lot of people's minds these days.
Absolutely. The Paycheck Protection Program, the PPP, it is now basically what I would break down to is we have the 2020 version and the 2021 version, if you will. And in 2021, out of the act that was put into play on 12/27 of last year, it exploded on the scene, but then created a lot of confusion. But let me break it down for you. If you're a business in need, you need to be checking out the Paycheck Protection Program because check this out. You don't pay it back if you use it as prescribed. It has no tax effect. It's literally ollie oxen free money for you, for your business, get you back on your feet. It's meant to help businesses, obviously, with payroll. So 60% needs to be spent on payroll. 40% can be spent on rent, utilities, interest. They've expanded the use of that. And they've really made it easy for those that are wanting or needing $150,000 or less. I don't want anybody to go hog wild on this, but you actually don't even provide any documentation. So we'll need to be careful on that. But with the Paycheck Protection Program, this go around, it is limited to those businesses that have 300 or less employees. And you do have a gross receipts test. If you got it in 2020 and you're wanting to get it in 2021, then you're going to need to show that you had a quarter in 2020 that was at least 25% less than 2019. And so there is less that are qualifying. And for me, it's an unbelievable program. And I'll just say this, most entrepreneurs are not used to this. And what is that? Many see it as a government handout. I see it as a hand up. And I think small business owners need to feel comfortable that if they're put in circumstances that are not in essence something they created, this pandemic, then they really need to take advantage of this because small businesses, they're the backbone of this country, and small businesses have to survive this. And that's what PPP is all about. And I'm glad that they have this second round.
Hey, JJ, I thought that the PPP program was imperfect, but it was imperfect because the speed in which it was rolled out. But based upon how quickly it got done and how it played out. And you and I were experiencing the rules were changing. You know, we're building the airplane as we're flying. So it was a little crazy, but you know, there's a little bit of confusion now with this second round related to it, including a first draw and a second draw. So can you unpack that part of it for us?
Absolutely. And I'll tell you this, I was very impressed, like you said, how quickly it came out. I mean, we shut down mid-March of 2020, and within weeks, they came out with this multi-billion-dollar program trying to help businesses and keep them going. Now, when we get into 2021, you're right, we have a second round of this. And the second round added to some confusion because there's a first draw and a second draw. What is the first draw? Well, if you didn't get it in 2020, then you're a first draw candidate, meaning you didn't get it before. And when you go and ask for the bank, they're even, and I hate to say it, adding to some of the confusion, because if you got it in 2020, then you are applying for second draw of PPP in the second round. So here's what we've got. We've got PPP second round that includes first draw, second draw. If you got it in 2020, then you're doing the second draw. If you've never got PPP, then you're doing the first draw. Here's what's huge about the new go around, though, is that you get the higher of your 2019 payroll cost calculation or 2020. You get the higher of the two. And for the self-employed that get included, it's the higher of their net income. And I'll tell you, on the agricultural side, they've now allowed the Schedule F filers, our hardworking farmers and ranchers, to base PPP second round, whether it's first draw or second draw, on their gross receipts. So the biggest thing to note is that if you never got PPP and you're getting first draw, you do not have to show a gross receipts test showing that you're down at least 25% in any one quarter in 2020 versus 19. But if you're getting the second draw, meaning you got it before, then that's where you have to meet that gross receipts test. And I'll tell you what, this is huge. I was anticipating it for so many small businesses. I just hope it's not too late, to be honest with you.
But you know, JJ, the key to this whole program is that you want the forgiveness, right? So even though the if it ends up being a loan, it's a very competitive loan as far as rate and the terms. But let's face it, businesses want forgiveness. So can you go through the PPP forgiveness and how the process is being made easier for millions of small businesses?
You bet. And with the PPP, where we're at is that they've come out with a simplified application for forgiveness. It's the 3508S, if I could get a little technical, and it's 150,000 or less. Now, this is when you go to apply for forgiveness, whether it's first round, second round, first draw, second draw, anything. And when it's 150,000 or less, believe it or not, you don't provide any documentation other than if you're getting second draw. You do have to provide documentation proving that your gross receipts were down at least 25% a quarter in 2020 versus a quarter in 2019. But in terms of the above 150,000, they have a 3508EZ, and it is easy. You're basically providing your calculation with a little bit of payroll. And then if you're above 2 million, because round one was up to 10 million, then you're going to file a form 3508. That all sounds like a snoozer, doesn't it? But here's the thing. Everybody gets caught up in this word forgiveness. From the beginning, I wish we weren't using this word because it gives this connotation of you already are doing something wrong by taking PPP and you now have to ask for forgiveness. Here's what it is you simply have 24 weeks. Are you kidding me? You're getting money, and when you're getting the PPP, you're taking average monthly payroll costs. Okay, so you're taking your annual amount divided by 12 times 2.5. What is that? You're getting 10 weeks of payroll, and you got 24 weeks to spend it. How is anyone not achieving full forgiveness? Those that are shucksters, if you will. So definitely want to make sure we tell everybody, do not see this as a low interest rate loan. I think you'll get a little spanking from the SBA if you take one of these loans and you do not qualify for it. But you're right. It is 1% on the amount that is not forgiven. and it's not compounded, and you have 5 years to pay it back. By the way, after your 24 weeks covered period of getting it, you have 10 months to file for PPP forgiveness. So we have plenty of time. This should be a low stress environment, in my opinion. But the SBA has been phenomenal related to this, though, with the speed and the amount of information coming out with this. Literally, hats off, kudos to the SBA on this. They have been a lifesaver for the small business.
Well, JJ, let me use the F word again, forgiveness, because I think there's a perhaps misconception related to this, that there's a blanket or an automatic forgiveness in this program. So can
You're
you
right.
straighten that out?
Yes, sir. And I'm so glad you brought that up, because that is so key. I mean, that's why we have fellow CPA, right? You're America's accountant, Seth said, but I'm America's CPA, Seth. So let's make sure we get that all in the straight lines there. Having a little fun with you. But when we're talking about automatic forgiveness, okay, doesn't exist. When we're talking about blanket forgiveness, doesn't exist. Just because you don't have to provide documentation doesn't at all mean you get to put any number down on that forgiveness application and assume it's going to get forgiven. You still have to do the calculation. You still have to prove it if asked. This is how I would relate it to everybody, is that when we file a tax return with the IRS, we don't send in our receipts. We don't prove anything. We don't send in financials. We don't send in payroll with our income tax return. But if asked, we need to have ensured that we calculated everything correctly. So the big misconception is, you're right. Is there automatic forgiveness? Is there blanket forgiveness? No. You have to ensure, and I'll just tell you this, for the small business owners, the self-employed, the IRS and the SBA, they interact with each other. They're gonna know. And if you're a sole proprietorship, the maximum you can get forgiven is $20,833, which is $100,000 divided by 12 times 2.5. I don't mean to get down in the weeds here on the numbers, but this is going to be the biggest ones that are going to find out that they've put a number down that's going to come back to haunt them. So you have to make sure you're not just putting down as forgiveness requests the same amount as your loan. You still need to do the calculation and still have everything ready to go if questioned.
JJ, let's shift gears a bit. I wanted to get your thoughts on this. Recently, President Biden signed an executive order extending the eviction memorandum. How do you think this is going to affect the banking industry over the next year to come?
Well, I appreciate that. And, this is kind of one of those issues that, how do you talk about it without your hearts going out to those that are in the circumstances that need this protection? So I don't criticize the president for looking out for those that, especially during the cold months, if you will, avoiding them getting thrown out. But here's where the banking industry is going to have the end of the domino effect on this, is there are landlords that need to get paid rent to then pay the banks on the loans that house those that are not able to pay rent. And I do feel as though the banking industry is going to suffer greatly on this because they'll be put in a position to foreclose, in my opinion. And then those landlords that everybody sees as rich and money falling out of their pockets, that couldn't be further from the case. I work with a number of clients that have money in the real estate. There are thin margins there. And when you're not able to make the number one priority payment in your real estate business, meaning paying the bank, that puts a pinch on everything else because they really are number one priority. So if we see the banks and they're having to do foreclosures, which means they're then having to take a lesser amount potentially than what is owed on the loan, they're using up reserves, then they're unable to lend out because the reserves are what they use to lend out. So from my perspective, I understand it. I don't know what we do differently, but we have got to prepare for the banking industry to get the short end of this, if you will.
Well, I'm glad you brought that up. I agree. I think that a lot of times when we talk about landlords, people have this daddy Warbucks or maybe even the Monopoly man running around
Right.
in the back of their
Right.
mind, and that's just not the case. I mean, and even Dan and I talk often about 401k investments and in portfolios. A lot of people's investment portfolios include real estate. And they may not even know that they include some real estate because they've got a wealth manager managing that portfolio and they've got them in there. So, the tentacles of this are widespread and can have resounding effects on our economy long term. Speaking of interests in banks, though, if Biden's Fed maintains low interest rates, wouldn't this at least kind of help both Americans and small businesses keep borrowing into the future?
Well, you would think so, and it definitely puts loans on sale or continues to keep them on sale, if you will. But if there's less money to be lent out, meaning if the reserves are being eaten up with foreclosures, if the reserves are being eaten up with PPP monies that were not forgiven, and therefore the bank has to carry that reserve for that, then there's going to be less money to go around. So no matter how low you make the interest rate, you could put it at zero. If there's not as much money to lend out, there's not going to be businesses that are going to be able to either grow, expand. Those that are in real estate aren't necessarily going to be able to acquire more. So the bottom line is, yes, interest rates being low help. But at the end of the day, I don't think that it's absolutely going to save anything related to the banking industry. Not to say that it's a bad thing, not to say that it's a bad thing. We all know we want low rates.
Well, JJ, let's say we are headed towards a potential banking crisis. What do you think the impact of that would be on the real estate industry? Because they certainly go hand in hand.
Absolutely. And I think that when we see the banking crisis and it rubber bands back and it creates, I think, a real estate crash, the ripple effect is going to hit every business, small and large. Many people don't know this, but most large businesses, these national companies, they rent. They don't own the real estate. And if we see real estate values crumbling and we see that people are not able to maintain the real estate, then we know there's not going to be an expansion to it. We know that then the overall value of real estate will have to go down. It becomes a buyer's market. Why? Because as banks potentially have to foreclose, as people are needing to sell because they can't continue to make the payments, there's going to now be more opportunity, yes, for those that are able to buy real estate. But from the perspective of the overall value and on the commercial side, I think we're hitting potentially upon, yes, opportunity for some, but an overall decrease in the real estate industry overall. So you're right, hand in hand there. We've got to really keep an eye on this. I think 2022 is the roller coaster. I think we're right about here, and we're going to all survive 2021, and then we're going to see the after effects and going into 2022.
So if we potentially did have a significant adjustment in the real estate market or even a real estate crash, as you alluded to, that potentially creates a buyer's market. But still, don't those buyers have to control that emotion a little bit and say, hey, the prices are coming down, automatic time to jump in? Don't you think there's a little bit more than just, hey, it's a crash, let me jump in and sweep this up?
Oh, absolutely, because there's going to be plenty that aren't necessarily able to sell. They're going to maybe try and refinance. They won't have as much equity. Or as we look at the value of businesses and the values, including the real estate, I think that we're potentially really heading in a direction that maybe if we're paying attention to it, maybe if we're being real with ourselves, maybe if we are really looking at this as that, well, this is what it could be, well, then maybe there's some things we could do in 2021 to help put the brakes on this. And in part, it sounds terrible to say, it's unpopular. I'm going to be a terrible person, I'm sure, for saying this, but at some point we have to address the eviction moratorium potentially in a different way that doesn't just put this only on the backs of the landlords and the banks. I think the industry is going to need some help from the banks. Scratch that. From the government, I feel like they've really been left out in the cold. And you alluded to my YouTube channel, which I appreciate. And in that, I have been in touch with people across the nation. And the biggest, in essence, cry out is in that real estate. It's with the landlord. And that's where the government's going to have to step in and not just keep saying, we are not going to allow you to evict.
JJ, April 15th is looming, and for many, it means tax season's here, right? So,
yes,
we've got viewers that are across the spectrum. We've talked a lot about PPP, small businesses, landlords, renters. What about just everyday Americans? What are some tax strategies that our viewers need to be considering?
Check this out on a Form 1040. So this would be every American, okay? There is now directly a spot that if you donated even just $300 to charity, you will get that deduction even if you didn't itemize your deductions. All that means is you're getting that deduction as long as you gave to charity. And in the act that was put into play at the end of the year, it's $600 for married filing jointly. So that's huge right there. Someone just saved $100, married filing jointly just saved 200. Here's the other part. We know about the stimulus checks. Technically, they're the economic impact payment, but many didn't get potentially the amount that they should have. They may have had a birth, or they got the impact payment, the stimulus check, on the first go around, and it was based on 2018 because they hadn't filed 2019, and they might have gotten a higher amount. This is where everybody wants to focus in. You get to have the opportunity on the 2020 tax return to ensure that you get that full amount. And if you haven't received the amount in the second stimulus check, there's a way that you're able to get it on your 2020 tax return. So you're able to rectify both of those economic impact payments. And then here's the great news. If you somehow got too much, then it's the IRS's error and you don't have to pay it back. I'll tell you what, though, people need to be doing some long-term planning related to capital gains. So as you're finishing up your returns for 2020, it's the immediate time to start looking at your portfolio related to potentially some of the changes we're going to see related to capital gains.
Well, I'm glad you brought it up, the capital gains tax. I know it's on the forefront of a lot of people's minds in large part because President Biden campaigned on changing the way that capital gains works. So has it changed, I guess, is question one. And then question two, how does that come into play this tax season?
So it won't come into play during tax season related to 2020. It's all really good news for 2020. But as we move forward, let's be clear, just because any candidate on the stump says we're going to do this, we're going to do that, doesn't necessarily make it, that it's going to happen, if you will. But now that we have a Democrat-controlled House, or continued, and in essence, arguably a Democrat-controlled Senate, and we have Democrat in the White House, it does make this more likely that what we may be seeing is a capital gain rate that may go away, or it may be an ordinary rate. It may be that it's stair-stepped or they introduce something, but here's the takeaway. Capital gain rates are going to go up. Why? Well, it's always popular to tax the rich. It's always popular to tax the investor, right? You talk about the daddy warbucks and think of the monopoly. Well, that's what people think. And so it's okay to affect, I think, those in terms of popular opinion, but it's going to be detrimental, I think. And then when we talk about real estate, here's the biggest advantage to real estate: the depreciation. It is ridiculous the amount that you can write off. Our former president, Donald Trump, well, he was brought under fire by just following the law. You're able to take advantage of depreciation, and there's nothing you could do about it. You just take advantage of it. But with that being said, what we're really looking at is that advantage being taken away related to real estate, not as much, and rolling back the tax laws to how they used to be, which is for commercial real estate, you're just writing that off over 39 years for most of your investment, where now a huge portion of your real estate investment you potentially can write off all in year one. And then on the like-kind exchange, I mean, this is the beauty of real estate, is that if you sell it, you can, if you buy additional real estate within 180 days that's like kind, you get to defer your gain, which is huge. So if these three things are affected, this, in my mind, from not just the wealthy, because it is like-kind exchange for even the small real estate investor, that is going to have a compounding effect related to what we talked about earlier with real estate as well as banking. And if we don't have people selling assets, as in if we're talking about stocks, okay, then things are going to be stuck in the market. We're not going to have as much liquidity. And guess what? Banks need liquidity. So I think we have a perfect storm. But here's the thing. Instead of just saying we have a perfect storm, then I think great minds like economists and those that are paying attention to this, well, they need to see it and not just let it happen. We don't need to just go over Niagara Falls. Let's see it for what it is, and let's start planning for it to, in essence, avoid it and safely go to shore before we go over in 2022.
JJ, so Seth and I each have one question left. Maybe we can just kind of do them in rapid fire. It's on the topic of business trends. So the pandemic has definitely changed the world, and we're seeing that continue to evolve. What would you tell our viewers as far as what business trend they should pay attention?
Well, with more people working from home, we know that homes are now going to have to be outfitted differently for doing business. It's no longer just the small business owner that's pulling up the dining room chair. It is now a business placing somebody almost in essence in their home. And so an industry that's going to match those needs, I think, is going to be something to be paying attention to, because every business in America is now looking at this.
With the popularity of working from home, JJ, as this is on the rise, as you indicated, what type of investment funds do you think will be most affected?
Well, probably in terms of a positive, it's going to probably be the ones that we know of now in terms of, I don't want to name names, but those that on the cheap can put out together, furniture that can be then shipped to you. But I think the ones that are going to be affected is the real estate investment trust, the REITs, because there is going to now be less of a need for commercial real estate, and REITs, for the most part, are invested in commercial real estate. So all the things that we've talked about, all encompassing potentially a banking crisis, real estate crisis, becoming a buyer's market, which means the values go down. You would want to reevaluate your investments in your REITs and maybe ensure that you're paying attention to that most closely as we move forward.
Lot to unpack there, my friend, and you did it so well and so eloquently. Dan, JJ's from the South, and there's two key things of people from the South.
Seth.
We like to use words, but we try to make things understandable. So,
absolutely.
Well, buddy,
what are you trying to say?
Hey, listen,
friend?
You're great, man. You're great.
You guys are wonderful. Thank you so much for having me on. It's a true honor.
Well, it's been great having you. Hey, before we let you go, you got a couple books out. Where can people find those?
Oh, I so appreciate that. On Amazon, one's JJ the CPA, top 60 questions in the last 27 years of my practice. And the other one is Cracking the CPA Code. And it's talking about how to get referrals from CPAs. And if you don't mind, check out my YouTube channel. Guess what it's called? JJ the CPA.
There's no surprise there, my friend. Well, listen, yeah, do check that out. A lot of good information. I know that's one of the first places I go if I've got questions about what's going on in the tax situation. So, JJ, we appreciate you, buddy. You're always welcome at the BizPo Show. We hope to have you back soon.
Absolutely. Thank you again. I really appreciate it.
When we come back, Dan and I will share our final thoughts. Welcome back to the BizPo Show. Well, if you've tuned into our show at all, you'll know that at the end of every show, Dan and I like to give you our final thought. Something that's just on our mind this week. Sometimes it's business related, sometimes it's not. But nonetheless, it's something we want to share. So, Dan, what's your final thought this week?
Seth, I was thinking about what would happen if there was a real Occupy student debt movement. And what I mean by that is there's been a lot of talk about forgiving student debt. Well, how about all those students or former students if they turned around and just said, you know what, we're not paying it. So what would happen? So we have about $1.7 trillion worth of debt out there related to education. So now if everybody got together and said, we're not paying it, that would certainly get a lot of attention from politicians. And what would happen? You'd probably have an even bigger movement towards forgiving student debt. Now, that doesn't make it right, because you could have a movement that says, let's occupy mortgages and nobody pay a mortgage. So you would be putting a huge strain on the financial system, and the government would have no choice but to come in. So if you had that type of Occupy movement related to student debt and you really unionized it, you probably could get the government to turn around and say, hey, we have to forgive it all. But there's a little bit more to it than that. And it's what is right and not right. And let me give you an example here. So a lot of people out there are saying college is too expensive, which is true. Too many students are in debt, which is true. But is the answer to turn around and say we're going to wipe it out? It's not. And the reason is not, is, let me tell you this, the average student loan debt out there is about $38,000 or so per student. And there's talk of forgiving up to $50,000. So how about this? If you have a student in college right now, and maybe you've been working to pay that off, or they've been working to pay it off and keep the debt down, and you say, you know what? I got a shot at $50,000 worth of free money. I'm taking all the student loans I can get right now and wait for forgiveness. So this plan is not going to work, because as soon as they do that, everybody's going to take on debt to get it forgiven. And who gets left holding the bag? You got it. The taxpayers, because it always ends with us. And that's my final thought.
Dan, I appreciate everything you just said, because these are things that I've been thinking about too. And no question that this is going to stay on the forefront of a lot of minds, and that we're going to need to be talking about that topic on the BizPo Show in the days and weeks to come. Well, my final thought this week is on regulation. Yes, that evil R word that conservatives hate and liberals embellish. I myself, not a big fan of regulation, at least over-regulation. However, I'm not a big fan of a society that looks kind of like the Lord of the Flies either. We do need rules, and we need governance of those rules. These past few weeks have seen stocks like GameStop get shorted at 140% of what was available, and organizations like Tesla invest $1.5 billion in Bitcoin. With regards to the first, GameStop, hedge funds should never have been allowed to short more stock than what was available. And while I'm not saying I'm opposed to what Tesla did, they are part of the S&P 500, as we talked about earlier. So if you own that index, you own Tesla, which means you own Bitcoin. Now, I recognize that the free market solved the GameStop issue in some ways, as those hedge funds not only shorted the stock, but in the end, they kind of took it in the shorts as well. But in the process, others got hurt. Those hedge funds, in order to cover their short, ended up pulling money out of the market that impacted other stocks that are part of other people's portfolios. See, there's a terrible trickle effect in our economy sometimes when things like this happen. And with regards to Tesla, I'm not saying that the organization shouldn't be able to invest in areas they think appropriate, in this case Bitcoin. But what I am saying is that there needs to be some level of regulation on something that is neither a currency nor a commodity, but acts like both, fluctuates more than a roller coaster, and government has no government backing or protection. Yes, I understand that the fact that Bitcoin is decentralized is part of its attraction, but Tesla is now part of the S&P, as we mentioned, which means if you own that index, you own it. It's in your 401k probably. So, you are in the business, and you may not have even realized that you were going to be in there. So I hope that everyone owning Bitcoin finds that they're sitting on a pile of gold in the end. But it's still possible that they may be sitting on a pile of Enron as well. Sunlight, alcohol, and yes, Dan, even Texas barbecue aren't all bad things so long as they're done in moderation. So too, regulation could be a good thing if there's moderation in it as well. And that's my final thought. Well, that does it for another edition of this week's BizPo Show. We hope you enjoyed it, and we hope you'll tune in next week. Be sure to tell your friends about it as well. From Dallas, Texas, I'm Seth Denson.
And I'm Dan Geltrude from New York City. Good night.